All four are up, as you can see here. All right, welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in the team from Charles Schwab now. Joe Mazzola, Head of Trading Derivatives Strategist at Charles Schwab, and Mike Townsend, who is a Managing Director, Legislative Regulatory Affairs at Charles Schwab. Good morning to both of you. Thank you so much for your time. Let's kick things off with you, Joe. I'm just wondering, hot retail sales, does that change the narrative, or does that just add to the confusion right now?
Maybe a little bit of both. So how about this? How about it keeps the narrative going that the consumer is more resilient than maybe what the markets initially thought. I think that that print today, basically beat in every single category along the way. Online sales were strong. It showed a real strong back to sales component. And overall, this idea that the consumers, a bit handcuffed in terms of by the price increases, that might not be the case, because not only was that a strong August, but we saw a revision to the July data as well too. So I think that shows that whether it's consumers are making substitutions in their goods, they're still buying, and that being 70% of GDP, that's an extremely important component. I think where you might see maybe some changing occurring is what does that do for the sector leadership? And I think that it's interesting to see the rate reaction today. It's very muted. I would have thought that there would have been a little bit more of an increase in the back end of the curve. You might have seen a little bit more of an uptick in the 10 or the 30 space upon the strong consumer data, but we just haven't seen that. So, bonds are staying relatively flat, and that's giving kind of fuel to the consumer discretionary sector, financials, and technology. So those are the sectors that should continue to perform well when you have an environment like that with a strong consumer, minimal inflation, and then rates basically staying relatively benign.
And Mike, what do you think of all of this? To Joe's point there, the setup as far as the retail sales, you've got the data, and then you've obviously got the market reaction feeding into, what's going to happen next at the FOMC. And then you've also got the who's who. So, there's a lot of factors that the markets are trying to grapple with, and that's ultimately going to factor into the decision that we get tomorrow. So how are you looking at things?
Yeah, Sam, it's such an unusual situation we have here with the Fed. I'm just dying to be a fly on the wall at that meeting, because the dynamics must be so interesting. We literally didn't know until last night who was going to be in the room. We got the Senate confirmation of Stephen Myron. We got the appeals court ruling that allowed Lisa Cook to continue serving while her court case plays out. So now they're all in a room together for a day and a half trying to sort things out. I expect, of course, that we'll get a 25 basis point cut. We'll probably get some dissents to that. And the dynamics in there just must be so interesting. And it'll be fascinating to see what Powell says tomorrow, both about how the Fed is dealing with the sort of conflicting numbers between jobs and inflation, and how it's dealing with the sort of overall independence issue and the dynamics in the room. So I think that's going to be even more watched press conference tomorrow than usual, and it's going to be fascinating to see what he says.
Yeah, some media outlets are calling it an awkward type of meeting. Mike, just want to pick your brains, because I've been looking through your notes, and something that we didn't really touch on yesterday, because it kind of got lost in all the US-China headlines, particularly around TikTok. And that is obviously what Trump was saying about these quarterly earnings reports, that, maybe that shouldn't happen because it's too expensive. He wants companies to focus on their businesses, and comparing the likes of China to, how they manage their companies over there, sort of more, long-term visions. I'm just wondering what you make of all of that, because tell me if I'm wrong, but I don't think this is the first time we've heard of this. I actually saw this being reported sort of quietly last week.
Yeah, Sam, this is going to be a really interesting issue to unfold. The president, of course, went on social media and said that we should move away from quarterly earnings and go to every 6 months. And the SEC picked up on that and said, we're going to prioritize looking at this issue. Now, the SEC did look at it back in 2018. They did solicit public comment. The president had talked about it during his first term, but they never moved anywhere on it. And what I think is going to be so interesting to watch is sort of this tension between, this idea that, A, it could save money and maybe will help companies focus on the longer term, versus some who think that, it's going to lead to less transparency, less information for investors, certainly less frequent information for investors, and potentially increased market volatility. So this has got a long ways to go, Sam. This is at the very, very start of a regulatory process that could take months or a year to sort through. They're going to have to look at the economic impact of that, because that's part of promulgating a rule like this. So this is the very beginning of what I think is going to be a really interesting story for the market to watch.
Oh, for sure, and we'll be keeping tabs on that one. And Joe, just to close things out, I mean, you and I have spoken about this, outperformance in the Russell 2K, small caps. I'm just wondering, depending on what we get tomorrow, but also coupled with that hotter retail sales print, what's the case now for these small caps? Are we off to the races tomorrow if we get that 25 bips?
Well, I don't know if we're off to the races. I think that's probably booked in already. So I think what'll be interesting is we're only about 2% away, right, from setting an all-time high in the Russell. But it's been the lagging of the indexes, and we've seen this head fake, and we've seen this happen many a times where it looks like the Russell is going to finally break out. The small caps, they need those interest rate cuts. Why? Because they have to borrow a lot. Quite often, they borrow at a shorter term than their larger cap brethren. And 40% of the Russell is non-profitable companies. So they need a lower rate regime. They'll do better in a lower rate regime. Maybe it's not the first cut, but I think if we get more of a dovish response, and maybe a dovish SEP, so summary of economic projections, that could be the thing that pushes the Russell to new highs if it looks like we're getting maybe 2 or 3 rate cuts through the end of the year.
Okay, good stuff. We'll be watching. Thanks so much for that, Joe Mazzola, Head Trading Derivatives Strategist, Charles Schwab, and Mike Townsend, Managing Director, Legislative Regulatory Affairs over at Charles Schwab as well.